right, good afternoon, everyone. So I didn't realize we were the final act. So I guess everybody ready for another 2 hours? Yeah, good for 2 hours? All right. No, but on a serious note, who's going to F Prime? Who's going to Wolf and Company after this? Fidelity? Wolf and Company? Both? Plan C? All right. So everyone hopefully is going to enjoy this evening. There's festivities going both at Fidelity and Wolf and Company. Before we start, I just want to first recognize the Fintech Sandbox team who put together an amazing 2 days. And it's really not these 2 days, it's the whole week. There's been an amazing series of events since Monday, and there's still 2 more days to go. So just want to give a quick round of applause to the Fintech Sandbox team for all that they do on a very skeleton crew. I have no idea how they put together such an amazing conference year over year with such a skeleton crew. So kudos to them. But let's get started. We have an awesome panel today. And, you know, we had a prep call, was it Friday at 11 p.m.? Was it something? It was really late in the day. But we did have a prep call late on Friday. And before we had that prep call, I went to all of their websites. I looked at their LinkedIn, and I think I may have cried. I actually think I didn't tell you guys this because just a little bit of background on myself. 25 years ago, I had a couple of startups while in college. Nothing cool and as sexy as it is today, but it was just really the dot-com era. And it really brought me back to a lot of memories being an entrepreneur and the passion and the vision and the inspiration that they have is just amazing. And that was reflected at the end of the day on Friday with them sharing kind of their story. And it was the most easiest prep ever. We were done in what, like 20 minutes? Like we were done. So we were like, this is gonna be fun. So on that note, Mohammed Dastigir, I'm gonna do a quick intro on myself and then I'm gonna ask each of the panelists to do an intro as well. But I'm doing a little bit of a curveball because no one's done this yet. We're gonna have, each of us are gonna share a fun fact, a hobby, and a favorite destination real quick as part of our intro. So I have the fortunate opportunity of leading all of our Fintech and Healthtech practice at MassMutual, which is essentially being able to talk to all the awesome, innovative entrepreneurs across the globe, and also help build the Massachusetts Fintech ecosystem, which is also part of the Fintech Sandbox, where we have our public state partners and industry academics, VC community, all intertwined. And I want to give a quick shout out to 2 people, Rob Sarney, and the red shirt sitting right here. He looks like a plant. He is a plant, just in case you're wondering. There's a few events happening tomorrow. I would ask everybody to attend that, take a look at the website. And Jason over there, our state partner. So if you need any state money, go to him. He's gonna hate me for saying that. Fun fact about myself is I've been to every continent except for 2, Australia and Antarctica. Hobby, I love swimming. I just absolutely love swimming, which I don't know, I guess in New England, if you go swim in 20-degree weather, but I still love swimming. You know, one thing that is just I'm super passionate about is kind of building bridges and bringing people together. And so this is part of the dialogue that we're going to have today. Victoria, we'll kind of go around the row here.
Thank you very much. Thank you very much for having me here. So, fun fact, my last name means toast in Spanish. So imagine how is that when you say Victoria Toast and people are like, what? Like the food, and it's like, yes, like the food. So that's a fun fact. Hobby, I love to play tennis. And destination, I would say any beach. Any beach in the world with a nice color of blue, I can stay there forever. So that's it.
Hi, everyone. My name is Justin Whitehead. I'm the CEO and founder of Pebble Finance. Fun fact, I'm actually an engineer, just playing a CEO on TV right now. Favorite hobby, skiing. I grew up skiing. I raced in high school. I was a ski patroller, pulling drunk skiers off the mountain safely. And favorite place in the world is Madeira, which is an island. It's a Portuguese island off the coast of Morocco. And if you ever have an opportunity to go to Madeira, 100% go to Madeira.
Hi, everybody. I'm Amy Ansack, COO of Greeny Re. Fun fact is that I did have the opportunity when I was younger to sing the national anthem at Shea Stadium, which I'm dating myself because it was called Shea Stadium back then, with a choral group that I was in. Hobby, I feel like I don't have many hobbies these days, but I would say probably being a swim mom for my daughter who does competitive synchronized swimming. So you can always find me on the side of the pool cheering and probably embarrassing her. And destination, I don't know what my favorite is, but this summer I did have the opportunity to go to Breckenridge, Colorado and do all sorts of outdoor activities in the summer. And it was just absolutely beautiful. And I can't wait to go back. So I'll say Colorado for now.
Super. I'm Satyan Mahajan. I serve as the CEO of Dataline Advisory. We're an native AI wealth management firm. So I won't share a fun fact about me, but I will share a quirky fact about me. So every few years I try to reinvent myself. And so prior to this fintech spin that I'm on right now, I was in the AI space and retail space in Amazon. And before that, I was one of the pioneers in motion capture, both in video games and in sports. So if you've played with the Nintendo Wii or played with the iClub golf system, those were companies that I started. And in terms of favorite destinations, we tend to make a family trip to Yosemite National Park every year. And I've been doing that since I was probably like 3. So there's no end to it in sight. I just am committed now.
That's awesome. That's awesome. And see, I messed up my own objective. See, we're going to go off script. But Justin brought me back. I'm actually half Portuguese, and I was going to say my favorite destination is just going to Portugal. Just amazing people, food, beaches, and drinks. I mean, all 3 of them together is just absolutely amazing. So, but let's get back to fintech. So, again, this panel here, and as we get into this dialogue, one thing that I think everyone is going to realize, hopefully, is that fintech touches everything. And it's just absolutely amazing, you know, from the moment we woke up today, maybe when we were sleeping, there was some involvement of financial technology, fintech intersection that was happening. So Victoria, let's start with you real quick. Can you tell us a little bit about what you're doing with your company and why is it important?
Yes, so Agxes, we just write it different to make it cooler, but yeah, it really is access to credit. And for who? For the agriculture industry. So we are the first AI-embedded platform for agriculture finance. We are starting with a co-branded card, AI-powered, and with our AI workflows, we are transforming messy agriculture data and cutting down and onboarding and underwriting procedure of 90 days to less than 5 minutes. And basically, what it's really surprising is that in 2024, the US banks deployed $700 billion into this industry. However, 70% of US farmers today do not have access to credit. So the opportunity is huge, and the access to finance is something that it's really needed in this industry.
That's awesome. And so I'm going to riff off a little bit of that. So just think about that. All the food that we ate today, technically there's some impact that your company is making with respect to that. That's absolutely amazing. I'm going to just ask a question from a lending perspective. What does it mean for whether it's the farmers or the lenders relative to what the business is?
Yes, so we are partnering with the banks, with the lenders, and we are not competing with banks. We are basically empowering them to serve better their customers in a cost-effective way with a better customer experience and getting to know the industry in a much deeper way than they do today. Today, there are tools that you use as your financials and your legals, yes, but what about productivity translated into financial insights? What about weather? What about the access to water? What about commercial relationships? What do they mean for the farmer? And most of all, we are able to bring behavioral data that was not there before, and we are able to retrieve it and to translate that into how reliable can a farmer be. And not because of who you are as a person, but how you are as a farmer. So how you have behaved as a farmer before it's going to get you better understanding of your potential customer so you can serve him or her better. Finance, it's a business of understanding and making yourself going to reach the same point, like have empathy with that people. So how are you gonna reach that point if you don't know each other? So we are bringing the tools for that, and hopefully this will give visibility also to farmers, because when you bring down the cost of underwriting and servicing, they are also they are being visible to a system that previously was not there yet for them.
That's awesome. Awesome. All right. So Justin, I'm gonna pass it over to you here. So we just covered agriculture. What about capital markets? Can we talk a little bit about what does fintech mean in the business you're in?
So I like to tell everyone that I've been in fintech before fintech was even coined a term. So I mentioned actually just prior that my background is as an engineer. So I've been building technology for capital markets. Pebble itself is an AI fintech company. We serve 3 different verticals of the fintech market and the capital markets, specifically asset management, wealth, and retail brokerage. And in short, what we're doing is we are connecting the dots between all the real events that are going on in the world. And if you're an investor, it doesn't matter. All of us here in this room, we all have a brokerage account. You know, Fed makes an announcement, you know, Trump says something, you know, company reports earnings, it's all affecting us in some unique, bespoke way, and we want to know why. What we're doing and what I call fintech now is how do you go ahead and leverage technology to take these questions that we're spending tons and tons of time, you know, manually, you know, hunting for and all that type of stuff, and answer that in seconds.
Excellent, excellent. All right, so I'm going to pass it off now to Amy. So we just talked a little bit about agriculture, capital markets, the impact there, fintech, AI. How about when it comes to sustainability?
Yeah, we love that. You know, at Greeny Re, we really feel like we're at the intersection of fintech, climate tech, and insurtech, which is, you know, we just want to use as many of those tech words as we can. But we're really trying to reimagine how the insurance market is reacting to the climate crisis. We've seen so far that really the insurance market, which of course is very traditional, very set in their ways, and there just has been a lot of reacting, and sort of there's a natural catastrophe, we react, they pay the claims or they don't pay the claims, and we sort of move on and wait till the next one. And so what we're trying to do at Greeny Re is take a more proactive approach to the climate crisis and sustainability, and really use financial innovations to encourage decarbonization infrastructure and renewable energy projects to being built. And so what we're trying to do is to make it easier for developers and for climate tech companies to get lower costs of capital and allow their projects to be more financeable in order to have those projects that wouldn't otherwise get funded, get the funding and move forward, and we just want to make that easier for them.
Awesome, and Satyan, last but not least, DataLine.
So DataLine, interesting company. So we connect consumers with financial advisors, and we do that in a number of ways. So we take the goals of the consumers, connect that through a knowledge graph that we have, and perfectly align kind of the needs of the consumer with the skills of the advisor. And we use a lot of artificial intelligence and machine learning to kind of make those connections. And there's a critical problem in the United States today. I mean, on the RA side, or the financial advisor side, the growth has been stagnant for the last decade. You're looking at 1%, 2%, or in some cases, negative growth. And on the side of the consumers there's a strong desire to find financial advice and financial guidance. And so we're kind of sitting in this perfect storm right now, where over the next decade, we have this massive transfer of wealth. About $80 trillion is being transferred between generations. And then similarly, there's a massive growth globally in wealth, about $100 trillion, $40 trillion of that based in the United States. And so it's a perfect time now to connect consumers to advisors. And what we've observed is that those consumers that work with financial advisors have much better returns, typically around 3% better than the market. And if you look at kind of different demographics, In the higher socioeconomic groups, they tend to have double the savings by the time they retire. And then in poor communities or less advantaged communities, you'll see a tripling in savings by the time they retire. So it's a powerful mechanism to help people in America, and we do have a crisis in terms of savings and retirement in the United States.
That's amazing. Can you double down a little bit more on the wealth management transfer? There was some Tribune data that I think that was published just around how large it is. Can you talk a little bit more of what that impact may look like?
Well, so what do you mean specifically in the wealth management community? What are you worried about?
The actual transfer that's going to happen and the leveraging of AI in that.
Sure. Yeah, no, so it's interesting. So kind of diving deeper into that figure of growth, so we have $80 trillion of wealth being transferred. It's now spouse to spouse, and then ultimately it's going to go from spouse to the next generation, sometimes in multiple ways, so multiple people. And what's interesting is every time those transitions occur, about 80% of the time, they're looking for new financial advisors. And so or for financial guidance, I should say. And so it's really a very good time to be in this business. And Dataline's had a really good run. We're about 3 years old, but in that 3 years, we've referred to, or helped, I should say, over 100,000 consumers. And last year, we referred about $40 billion in assets. We're hoping to double that this year. So it's been a very, very interesting time.
It's amazing. Yeah, it's just, we had a session earlier in the week where we just dove a little bit on this from a MassMutual perspective, because we have a growing wealth management business, and every time we see the data and we take a look at what the potential impact could be, it seems nice, but it's a little scary. So I think it's a large problem that we have to solve. Justin, coming back to yourself, just talking about Pebble Finance a little bit here. What is the benefit, or how are you using AI in Pebble Finance as part of sort of your business model?
Sure. I mean, we use it internally, but I'll actually dive onto the wealth stuff here, because wealth is a market that we sell Pebble into. So I mentioned before that we're in the business of helping people understand what's going on in the world and how it affects the portfolio. As it pertains to wealth managers, as a concrete example, one of the challenges of younger investors not adopting a financial advisor, everyone wants one. But at the same point, they're like, am I gonna pay 1% for someone that's gonna give me the same type of information I just read on Reddit or something like that? And it's kind of a tough pill to swallow. So how wealth managers are using our technology is to heighten and elevate the level of service. So now when clients call up and they have a question, that manager, even if that manager has 30 clients or 100 clients, they can go ahead and deliver right there on the spot. Hey, here's some personal insights. Here's what's going on in the world and how it's affecting you. This is what the research team here is thinking about it and all that. These are all activities that were not possible prior to AI adoption, because it would require those managers to sit there and actually watch each and every portfolio and read every PDF that came out of the research team and all that type of stuff, and people simply don't have time. So AI, in terms of its impact specifically into the wealth industry and where we're putting our investments in, is to go ahead and elevate that experience and also enable those advisors to scale a little bit more on a technology level, make it easier for someone and more profitable for people to deliver the same type of service or a better service to someone that has a smaller set of assets.
Yeah, it's interesting that you mentioned that. So I think the traditional model has been percentage AUM, but I think we're definitely seeing a shift where people are saying fixed fee now. You're seeing a lot more entrants in this space. We're saying, hey, we'll pay $10, $20 a month based on kind of a different kind of set of needs. And what's exciting about the AI space and the direction we're going right now is that the tools and capabilities that were only available to super high net worth people just a few years ago are now coming way down market. And there's accessibility now, even at, people are paying $100 a month or $50 a month. And I think we're going to continue to see that over the next couple of years. And I'm saying the word years, which is wrong. It should be days and weeks, because AI is progressing at such a fast pace that innovation is occurring daily, if not weekly.
Yeah, it's a phase shift in terms of service coming down, which is awesome.
Awesome. That was great. I'm going to go to Amy, and then I'm going to quickly come back to Victoria. I got two questions that popped in my mind here. The first one, Amy, just can you talk a little bit more, because really what you're doing, I think there's some mission-driven purpose behind it. I think you touched on a little bit, but can you just double-click on what that is? And then I have a follow-up to that.
Yeah, I mean, our mission at Greenie Re is really to enable renewable infrastructure to be built. And we really want to do that as much as we can, and especially targeting low-income and disadvantaged communities, which have really so far been kept out of the green transition. And so our mandate from our funders is that at least half of our portfolio does have to fall within low-income and disadvantaged communities. So for an example, just this morning, our underwriting committee was meeting to review a project in which we would work with a company that provides a credit insurance product in order to backstop the off-taker's non-payment risk under a long-term power purchase agreement for a solar farm that would feed a data center in the Midwest. And so this is something that it would, I can't remember the exact percentage, but a large percentage of it would feed into a low-income and disadvantaged community. We're putting renewable energy back onto the grid, and they're also using that for a data center. So we're really enabling the production of clean energy infrastructure in the country. We know that the demand for energy is skyrocketing, especially with all of the AI and the data centers that I'm sure everyone's been talking about all day. And so we really just want to make sure that the way that we're increasing the amount of electricity that's being put into the grid is done in a clean way. And so we're definitely focused on fighting the climate crisis, and that's our mission. And we want to make sure that we're doing it in a way that is also enabling climate tech companies, solar developers, other renewable energy developers to do so in a financially, in a way that they can preserve their financial stability and continue on, since it's a really tough market.
Awesome. And again, I'm gonna I was just having a conversation the other day where we have solar on our house.
Great.
And we've had it since actually 2015. I think we may have been one of the first in like our whole town, maybe, I don't know. But, now we're using more energy pool, and we with all the tax incentives that are technically going away in December, what does that mean? Is there any impact to your business, or just sort of the whole industry?
Yeah, absolutely. It's I wouldn't say it's a great time right now. Unfortunately, a lot of those tax incentives are sunsetting, not all of them. There was definitely, it was very clear that the administration is not as interested in solar and wind as they are in other technologies. So there are other renewable technologies that are still going to be eligible for tax incentives going forward. I believe that you could add a battery to your house and still get that tax break in the future. So luckily, there are still some things, but that's why insurance is even more important than it was before, is because these tax incentives provided a way to get entities, organizations, financial institutions that weren't necessarily interested in the mission aspect of the renewable energy industry, but there was just financial incentives, and it just made financial sense to get into it. And so we want to make sure that since those incentives and tax breaks are somewhat going away, insurance can step in and make sure that we're de-risking these projects, making sure that the cost of capital is lowered for these developers, and we can still incentivize others to join into the clean energy transition.
Awesome. All right, so I'm going to double click now, Victoria. Similar question, not solar, but I guess you could use solar to help with agriculture. But let's go back for a second. So when you're looking into the future, what are some of the challenges that you foresee coming up in relative to your industry? In really two aspects. One of them just technology, right? So AI, quantum, and then is there anything else that there were maybe some risks relative to what your business is?
I believe that AI, it's something that will change this industry, financial services, because, and we have heard that in every panel in this event, like AI is here, and everything will change because of AI. So I do not see AI as a barrier or a challenge, more as an enabler and growing the market for everyone and bringing new people into the system and using different techniques of AI. And you can use visual language models and large language models and LLMs and you name it. Or we are using satellite imagery and interpreting that into how the crops are matching with your transactions in your cart. And we are able to track and bring transparency into a system that was opaque before. So you were deploying loans into a debit account and you didn't know how the person was using them. Today, you can track every transaction and they see if they are buying fertilizer, if the land is actually growing the plants as they should. So you are bringing new validation and new anti-fraud technologies with the combination of domain-specific expertise plus AI. So I see just opportunities, and I would say to embrace that, the leaders, with leaders of different organizations, we should embrace. And change is a constant in life. So we should embrace innovation within our organizations and partnerships, because it's impossible that we can do everything at the same time. But if we partner, we can do lasting change in our organizations and into society too.
Awesome. Completely agree, 100%. I think if we look back 13 months ago or so, maybe a little more than that, there was just a lot of fear out there around what is AI, and look, in a big financial services company like MassMutual and really everybody, we have to be super careful of what we're doing. You know, there's 175 plus years of reputation, and so there's that huge piece. So on that note, I think, and this is probably, I'm gonna go back something onto you, which is there a trust concern with AI as whether it's advisor? And I think, Justin, you could probably answer this as well, but we'll start with something on, which is there, what's the adoption? Is there any trust issues you see?
It's a great question. I think that with the introduction of any new technology, there's always a trust issue. But you need to basically, as a consumer product company or a financial services company, you need to build that trust with consumers over time. Show them what you're doing works. Show them that, especially in Fintech and Healthtech, that our systems are secure, and that especially if you're using generative AI, your systems are not hallucinating. And I think if you build that over time, we can create a lot of trust in the AI space. And I think that, if we look at Boston specifically, this is a super special place. Like, you go back a couple hundred years and you're like, wow, they created that here. They created that here. Mutual funds created here. And like, wow, first venture capital firm created here. Fidelity back in 1947 was, starting to think about using computers and online kind of like accounts and whatnot, all created here. And I think that we have to have this openness and willingness to change and do different things. And I think we just came back, my team just came back from California from a AI innovation event at Google, Harvard, Google, Stanford, and MIT. And it was all about, we have to create change, we have to be thoughtful about how we do it, and we have to build trust with consumers along the way. And so I think everyone is aligned on building the trust and ensuring that customers believe in what we're doing. And I think we just have to have the willingness to do hard, difficult things and make the decisions from our own mindsets, which sometimes can be very fixed.
Awesome. Justin, anything you want to add?
In financial services and all capital markets, trust is paramount. It's the biggest hurdle for adopting AI anything, so to speak. Our business lines, we sell into asset management, wealth, but also retail brokerage. So retail brokerage is even more special in that it is also highly regulated. And there are very specific things that brokers can and cannot say. It's not just accuracy and all that. And what is very unique and proprietary to how we approach these problems, we basically spent a lot of time, working with a lot of the large brokers, some in Boston, some not in Boston, whoever those may be, but really worked closely with legal risk and compliance teams. You find out a year or two ago, they didn't really know what questions to be asking of AI. Like, what are the actual risks that we need to be worrying about and all that? And the conversations have largely matured since then. And then, kind of fast forward to today, every single output that we produce is transparently linked to the source that it came. We've got to address the risks and worries for the regulators and all that about hallucinations and an AI telling a retail investor, like, hey, it's a great time to buy Microsoft or something like that. Big no-no. The number of safeguards and guarantees and special processes that we have to go ahead and eliminate hallucinations from any of the output is also unique and proprietary. That is hard mode. Once you solve hard mode, you can do anything in wealth. You can do anything in asset management. But you gotta build compliance. You gotta understand the legal risk and compliance needs of your clientele well before you get started with AI anything in this space.
Awesome. So let's pretend it's 2030. For each of your industries, and anybody jump in here, I'm not going to pick on, just jump in. Where do you hope to be? Where do you hope the industry is at that point in 2030? Or where do you think it's going to be? One of the two.
So I think this is happening next week. So basically, I think that the pace of innovation in AI is so fast, so impressive, that every day I wake up and either my kids or my friends at work are like, hey, did you see this? I'm like, holy guacamole, that's the coolest thing I've ever seen. And I think we're just moving so quickly that in the next year, we're gonna see step function improvements in kind of our experiences. But if you were to answer your question, if I go forward in time, and if I look at what the end state would be in my industry, I wanna have hyper-personalized financial guidance for all consumers. And I think that will be a blend of artificial intelligence, along with human beings. And I think that is an ideal end state where we can basically provide consumers exactly what they need when they need it. So just in time kind of, thoughtful guidance and support to help them achieve their financial futures and goals.
Amy, since you're next there.
Yeah, I'll go. Excuse me. So our whole purpose for being at Greeny Re is to take on some of the risks that the traditional insurance market has been reticent to do, whether that's because there aren't years and years of loss and actuarial data histories for these types of climate risks, or because there's frankly no incentive to do so because most traditional insurance companies have very established lines of business with customers lining up at the door, so there's real no incentive for them to take a risk. And so Greeny Re is hoping to be able to take on some of these risks in partnership with the traditional insurers and basically demonstrate that these more proactive climate risks are worth taking. We can understand how to do the underwriting, and for the next project, maybe they'll take on a larger portion of the risk and we can reduce our risk for that particular insurance policy. And then we don't want to put ourselves out of a job, but we sort of do because we want to prove to the traditional insurance carriers that they should be taking on these types of risks. And we would like to be able to pivot to new climate technologies that are being built right now so that we can continue to pave the way. So essentially in 10 years, we want to be not writing the same policies that we're writing now because you can find them at any traditional insurance company, and we're taking on the newer climate technology risks that we can't even think of right now because they haven't been invented.
Let's see here. So in 5 years, the people that are in college today are going to be out there and in the workforce. I think there's going to be a different demand and expectation in financial services in terms of how you interact, what you expect to be doing at work, and the types of tools and technologies you have available to you to do your work. If you're using ChatGPT to help you cheat your way through college, you're going to use ChatGPT to go ahead and help you cheat your way through work in some way, shape, or form. I think that is ultimately a negative drag on a lot of the SaaS platform type businesses that are out there. I think in wealth and retail, specifically, that phase shift that we mentioned a few moments ago will happen. The experiences of the ultra high net worth Investor will be made available to high net worth clientele, all the way down to brokers being able to basically create a full self-driving equivalent of like a lightweight wealth experience. So I think that phase shift does happen in the next 5 years, and I think we're also about halfway there to the next great financial crisis, but that is a whole different topic.
Yes. So on our side, today the market grows at 6% year over year. We would like to see it in 5 years growing at least double, because lenders will be able to increase their throughput of loans analysis by 200x, and then that 70% of farmers not accessing credit today will be less than that. So everyone wins. And this, what we're thinking is there's always a way in the intersection of impact and economic profits. And in the way that we are able to meet those needs, we are going to create real change. So more farmers in the system, double the year-over-year growth, and then increase throughput loans by 200x for every single lender.
Awesome. All right. So I could stay here forever. This is such a enlightening conversation. We are coming up on time, and so I want to close with really more of a rapid fire round around. Again, you all are distinguished leaders of new startups in Boston, which is absolutely amazing. And there's probably a number of entrepreneurs. We call them Fintech curious, where they may be interested in starting a business, or Fintech mature. So I guess the question is, what advice would you have for any of the potential or current entrepreneurs that are out there in the audience? Lessons learned that you've had as you've kind of built your different businesses, just words of wisdom, something that they can take back. And hopefully 5 years from now, they're the ones that are maybe sitting on this panel, or maybe it's in a year or two from now. So I'm going to start at the end there, Sathiyan, if you could kick us off with that.
Sure. So first of all, at Dataline, we are hiring aggressively right now. So if you're an AI native engineer scientist, and I do mean scientists, not just data scientists, so physicists and whatnot, computational biologists, whatnot, and or product managers, please do see me afterwards. We would love to have you and love to have you join our group. But I think the biggest thing, or the most important thing I could say, is just to constantly be curious about the world around you and be open to new ideas and kind of, interesting ideas and creative thought. And I think don't be stagnant in your thinking. Always, be open to hearing what people say, hypothesize, and invent, and constantly kind of challenge the norm. Because I think the world is too interesting a place to be stagnant.
Yeah, and just building off of what he just said was that, my career was mostly spent in large insurance corporations, and I was trying to make change from within and just kept hitting a brick wall. And so I never thought I would be in a startup. I never pictured myself doing something entrepreneurial, but at some point I just couldn't take it anymore. And so I would say, take the leap, take the risk. If you're trying to make a change in this world, and Lord knows there's a lot of things that we need to change, see what you can do and take the risk. And especially if you're young and you're starting out, now's a great time to do it. So I would say go for it.
To add on, I would say raising capital is not a successful business. Constraints are a good thing. So embrace that and use constraints to go ahead and inspire creativity and figure out ways to hack and grow your business and test your idea and validate. And additionally, networks are your most powerful asset. So if you are here in this room, you should absolutely be meeting and connecting with everyone. And in some weird way, shape, or form, that network is going to end up being, give you something positive back in return later down the road.
I would say stereotypes keep yourself independent from them. I have founded a farm. I have worked in a farm, and when people knows that, they are like, you? Because they are judging me for their stereotypes. So keep yourself away from any stereotype. Doesn't matter where you come from, doesn't matter who you are, your name, your background, your hobbies. Do whatever you want to do. Keep a strong mind and a disciplined every single day work. You will do it. But you have to keep yourself away from things that will not contribute to you.
I had one more thing to add, actually. Sorry, Mohammed. So basically, if you're early in your career, just starting out, big companies get a bad rap, but companies like Amazon, which I can speak to directly, Google in some cases, are actually exceptionally great places to get your career started and learn disciplined ways of building businesses and companies. And so if you are early in your career, want to be entrepreneurial, go to some of those places and start. Stay there for a few years. If you like it, you're having fun, continue on. I mean, I would have never left Amazon unless my good friend David Blunden had said, hey, come work with me at Dataline. But those are not terrible places to get your career started. But be very thoughtful about where you go and very kind of careful about where you go. But you can find fun times in some of those places as well.
Awesome. And I know there was some clapping, and we are going to clap because not just for not just for what Victoria said, which I think is extremely important. I synthesize that to be yourself. Just be yourself, be your unique self. Stand up for what's right. Stand up for what you believe in. And don't be afraid to fail. That's kind of I've failed a few times, but every time I failed, it just made me stronger. So I want to thank this panel. This has been truly inspirational. I think an awesome way to end the week. And I want to definitely thank Victoria. Those were strong words. So let's give everybody a round of applause. And then finally, again, where's Sarah Billard? Hopefully she comes out here because hopefully I don't make her blush. She's gonna get mad. But I call her the godmother of Fintech because she literally is. Again, a round of applause for Sarah and for the Fintech Sandbox team.